female, another woman in trading. Sniper requested to speak.
What's up, guys?
How are
I'm
you?
amazing. How about yourself?
Fantastic. Tell us a little bit about yourself, how you engage with price,
Appreciate you having me up.
and your
First off,
story.
I'm sorry. Can you repeat your question? It just cut out.
No, yeah, I was just saying if you wouldn't mind telling us a little bit more about yourself, maybe how you engage with price, how long you've been trading.
Yeah, absolutely. Been in the market for about 3 years or so, a little over 3 years now. As far as how I trade personally, so I'm a tape reader. So I'm essentially looking at real-time orders that are being executed that come in on the tape. And then I'm also looking at level 2, which are orders that have been placed and submitted, but they haven't been filled yet. So that gives me a pretty clear picture based off of supply and demand in the market, kind of, figuring out where those imbalances are, right? Where the aggressive buyers are coming in. If they're coming in at the ask and above the ask, that's for me is signifying an aggressive buy. Whereas if the selling pressure is coming in at the bid and below the bid, that's an aggressive sell. So I'm just strictly a tape reader. I've been mainly scalping. I scalp the market as well as a day trade. I have some, long-term equity positions as well. So, but I don't really trade equity as much as I trade options and futures. Just something that really appealed to me. I believe in something called the 60-minute workday. I like making my money in the first hour of the market. I love coming back for power hour, super volatile session, and being able to scalp. Just small moves when it comes to SPX in particular. Really, really enjoy that. On a psychological standpoint, I really like what you guys are talking about. I was up here for a little bit just as a listener and kind of paying attention. One of the things, though, that I always talk about, I love teaching trading psychology because I believe that that's where your true edge really can come from. You could teach technical analysis, right, to really anybody, but I always say that, in reality, 30% of the game is your technical analysis and what you're looking at and being able to decipher that information. And then 70% is the psychological aspect of trading, right? And the thing is that a lot of people don't really understand this, but a lot of people, specifically on Twitter, right, they love to predict. They love to predict price action instead of just playing what's in front of them. And I think that comes with, my number one rule, something that I always talk about is the market it's random. You got to accept that. You could do whatever you want in predicting the next action in the market, anything that you want. And there's going to be times that the markets might adhere to that analysis, right? And it makes you feel like you're in control. But the reality of it is that there's a lot of times that the market's just going to pass through your plans and all your levels like they never existed. So you really have to, on a psychological standpoint, being in the market, you got to be able to understand that human emotion is huge. We always talk about fear and greed, right? I always add in hope as well. Hopium is what I call it, right? It's like a drug, right? Like opium is a drug. Hopium is a drug as well. People are always, they want their analysis to be correct at all times, right? So they'll buy something and they'll hold it for their life, right? Because they think it's just going to come back because maybe last time it hit their stop loss and then it went back in the profit. I always say that bringing baggage from a previous trade into a new trade is just terrible. It's the quickest way for the next thing not to work. So that's me. That's pretty much what I always look at. I always adopt the next mentality. I think that's day trading is super fast, right? And there's really no value in bringing that baggage of past trades into new trades. So whether you're killing it in the market or you're getting smacked in the market, you got to be prepared for the next trade at all times. Because you could sit there and you can dwell on your loss, but there's 50 other tickers that are going off at that time and you're just paying attention to one, right? Then let's talk about the opposite. You could dwell on and sit there on your wins, and then you become ego-driven. So human emotion and that psychological aspect, right? I mean, all of this combined together and understanding it is really what is key into developing a winning attitude. So there's a lot of people on here, and I see it every single time. Been a part of the FinTwit community for about 2 years now, and one of the things that I always see is everybody has this "I am right" attitude, right? Majority of people, they just want to be right. instead of having the, can-do attitude. The can-do attitude is way more important than the I am right attitude. I am right is a bunch of bullshit. I think that the reality of trading is losses are, they're expected. Now, they're not expected every single day, but they happen, and it's a real thing. I've had streaks of, phenomenal green days, but I've had my red days too. I've had, last year, I always talk about this. June was my worst month that I've ever had trading. I lost 160K, right? And why was that? Because everything was working out in my favor in terms of what I was doing, what I was able to control. Essentially, my risk management, my position sizing. That's what I had control over during that time. Every time I jump into a trade, though, I noticed that there would just be times that the market would reverse, and again, it was because of that aspect that the market is random. Now, looking back on that is something that I love to speak on because it taught me a huge lesson. It taught me to never change my rules. And one of the things about what happened last year in June, I remember one day I took like a 17K loss, and I was sitting there, and this was like my third losing day in a row, and it wasn't typical for me, right? It was just a weird, shaky market, and just wasn't performing the way that I anticipated it to perform in my favor. So, there came a point on a psychological standpoint again where I was sitting there and I'm like, you know what? Maybe my strategy, my edge isn't there anymore. Maybe it's just not working. But then I took it back to this analogy that I always talk about. I always talk about the casino, right? And how the house always wins. So I'll give you guys a quick example of that, and then I don't want to take up too much of other people's time here, but I'll give you a quick example of it. So what I always think about is this. I always think about Vegas, right? I think about being a casino owner. Let's just say I own MGM Grand, right? That's my casino. And you come in as a player, and you come into a blackjack table, and you take my blackjack table that night for $3 million, right? You take it, and what happens at that point? I'm going to sit there essentially as the pit boss or the floor manager, and I'm going to, and hook you up with a host, probably hook you up with some free dinners, whatever I can to keep you there and potentially alter your mindset. Maybe send some nice bottles up to your room, maybe even send some hookers up to your room, whatever I have to do essentially to get you to stay and hope that you're going to come back to my table. Why is that though? Because you took my casino for $3 million, right? And I want to essentially get that back. But how do I get it back? By you essentially coming back and playing. Because when the player comes back and their mindset is altered, right? They're now changing their rules. Maybe you're a little ego-driven as a player and you're coming in and you're playing a larger hand than normal, right? Or maybe you're not playing as progressive as you were before. But what happens, right? Normal circumstances, a player comes into the casino again, and what happens? They end up giving it all back, right? Because the longer they play, the longer that they're sitting there and they're altering their plan, right? Every single time, changing their rules every single time, they're going to lose that money and essentially give it back to the casino. But what doesn't the casino ever do? They never change their rules on blackjack. That's what gives them the edge, that they don't change their rules. So it's something to think about. If you've been in that point before where it's hard to take losses, it was hard to face myself, to be honest with you. It was very tough, right? But you got to get over that hurdle, and you have to understand that your rules, your risk management, your position sizing, that's everything. All the stuff you don't want to look at and you think it's boring because you just want to make money, that's the stuff that actually saves you in the market. It's crazy that I had to find that out, obviously, months down the road into me starting off as a trader. I think risk management and position sizing is a foreign concept for new traders. It definitely is, right? But you have to understand that is essentially the safety of your account. Making money is one thing. How do you keep that money? You keep it with that correct position sizing, having a good risk management profile. Thanks for having me on, man. If you have any questions, I would love to answer.
Wow. Really, really, great vibes. I see Rod's reacting there. I know he's into performance and kind of coaching and talking about psychology. Rod, do you want to build on that at all?
Hey, everyone. Hey, Kit.
What's up, buddy?
No, I completely resonate and with everything that you just said, Sniper. And my question to you is, Like how, when it comes to dealing with success in itself, like what is your mindset when it comes to dealing with success? Because you mentioned about dealing with losses, but the responsibility of having more money, the responsibility of that from your perspective, how do you sort of plan things? How do you think about wealth and how you're going to distribute it? How are you going to pass it on? I'm just a bit curious on that.
Yeah, so really important question, right? We talk about losses all the time. What about your wins? And like I had said earlier, it's very easy to become very ego driven. It is. It's natural because in reality, especially when I scalp, for example, right? It's the fastest money that I can make essentially by clicking a few buttons, right? I mean, within 1 hour, right? If I'm done within an hour, I'm normally making a nice 5 figures on the day, right? It's very, very fast. It's very easy to become ego driven. It's very easy to that had a call coming in. It's easy to think that, oh, I just mastered the market at that point. I'll give you an example. When I started off trading, I started off with $3,000. And I was very lucky. I came in during a great time in the market, essentially a market recovery, a linear bull market to the upside, right? And it was during 2020. COVID was now so-called disappearing. It's still around, but the rates were kind of going down, and market was phenomenal. You could have really swung anything overnight, right? You could have swung some calls overnight, and you could have made money. That's the reality of what that market was. And being a part of that, right, I took $3,000 to $8,000, and I didn't have a lot of money at that time. So that was a lot to me. That was huge, that I was able to essentially almost triple an account, right? And I'm like showing everybody my Robinhood, and like this the typical like individual in the market who just started out, and I'm getting very lucky a lot of that time. What happened? I blew the whole thing. I blew 8K. And it was like a straight gut punch, because I was sitting there and I'm like, wow, I had all this money, right, that I never didn't have before, and I made it all. But just as quick as I made it, even quicker than that, I lost it all because that ego set in. So what changed it for me? What really changed it for me was understanding position sizing. Position sizing is everything. And it was funny because during that time as a new trader, I didn't want to watch those videos. They're not appealing, right? They're not sexy, straight up. What they are is, essentially telling you how to be the safety of your account, but it's boring. If you watch a video on risk management and position sizing, guys, it's boring as hell. Even teaching it is boring, right? It really is. But it is the most important thing. As boring as it is, it's one of the most important things. It's the one thing that'll save you as well. So I think about that a lot. When it comes to my wins, I'm a big, big believer in managing position sizing accordingly. I have a clear defined risk before getting into any trade. Any good trader will tell you that you have to have a clear defined risk before getting into a trade. You have to know what your risk is before you jump into that trade. And with that comes managing your position sizing and understanding what that is. I'll give you an example of it. Let's just say on, last week, for example, on Friday, I made a really good amount of money in the morning, right? I had a pretty large position sizing. Right at the open, I was able to scalp SPX to the upside. I took about 35% off of my first trim, 50% off of my second trim, and I was holding all my runners at break-even stop. So essentially, if we had a pullback in the market and it hit my break-even stop, I already secured about 90% of my profit, right, based off of my position sizing. Now, what did I do for the next couple of trades? Did I go in at full sizing? No, not necessarily, right? Instead, I went in maybe a half position sizing or maybe even a quarter position sizing. As the volume started dying down in the market, now volume is something that one of the most important aspects for me, right? When it comes to having confirmation bias in a trade, I need volume. And when I noticed that the volume kind of started dying off, but a couple of these tickers were holding, and they were holding really well. For example, this happened a couple weeks ago on Tesla. Tesla just chugged all the way to the upside. Low volume, but it was consistent to the upside. It was just a straight trend to the upside. During that time, what did I do? I managed my position sizing accordingly. I made a lot of money in SPX in the morning, so I knew that I could risk about 20% of my profit, if anything, at max, right, into that trade. So that way, at the end of the day, hoping that I would still end up green. So that's something that has really helped me actually really control that ego, right? I'll take big wins a lot of the time, right? And I'll become that ego driven person. I'm only human, and it happens to me as well. But having the discipline to understand that position sizing is really everything. I always talk about something else as well: walking away. And what I mean by that is just a very simple thing: walk away from your desktop, whether you take a loss or whether you take a win, because you need that. You need to realign with the right energy, come back and sit down, and then be in front of your monitor. And this literally means, like, I would walk to, my backyard, maybe, throw the ball around for my dog or something like that and come back, or walk outside for a little bit, or even walk to my kitchen just to get away from that, and then be able to come back and then be able to perform at the level that I want to, with the correct discipline, without all the human emotions, because again, I'm only human. So, these are things that are really important to me. So on the other side of that, and not becoming that ego-driven individual, you got to have that discipline.